Away we go. Good morning, everybody. This is Dennis Wilburn with the Active Trend Traders for uh, the Thursday edition of the Friday How to Make Money Trading Stocks. Of course, the market will be closed tomorrow for Good Friday. And joining us today from Dallas, Texas is Mike Traeger. Hi, Mike.
Good morning. Morning.
So yeah, Michael Bishop is off still skiing or something. I haven't heard from him this week, so I hope he didn't have any issues or like have an avalanche or fall into an ice crevice or something like that.
Or airport connection in Brussels.
Exactly. And so it's been a very interesting week. So I want to remind everybody that all the materials that we do present are for training purposes only, and traders should always paper trade any new method prior to the risk of their own personal capital. I'm going to get a shout out to Tom Ludwig. Tom, thanks for sending me those emails. I will be reviewing those this weekend. I'm in the process of doing some upgrades on our house here in California, and so it's kind of funny as I trade a little bit, get the newsletters out and all that kind of stuff, and then all of a sudden I'm underneath bathroom sinks, changing out water valves and all that kind of stuff. Fortunately, yes, I was an engineer in the Navy, but my dad was a pipe fitter and plumber, and so I have no problem jumping underneath the sink and swapping up valves and P-traps and all that kind of stuff. And then my wife has worked as an interior designer, so she's been getting her hands dirty doing wallpaper and all that kind of neat, nifty stuff. So all I know is the last time we renovated a house was about 15 years ago. And you know what, Mike? The years have crept up on me.
And they have a way of doing that, don't they?
They certainly do. Let's get right into it today. Michael's not with us today. So I hope that, I know with the Active Trend Trading Premium members, we do a training every Wednesday night. This past week, just last night, we were chatting about tying the pieces together in your trading plan. Next week, and I think this is a very timely topic, we're going to be talking about exploring tops and bottoms. Because Mike, it certainly looks like at least we've put in a temporary top on the S&P and some of the other indexes. But at this particular point, we kind of have to treat it just like it's a pullback rather than, regardless of how much sense the market makes, we have to treat it as a pullback rather than a full-blown, hey, we're going back into beast mode to the downside.
Yeah, I think I agree with that.
And so anyway, if you're not a premium member, you can always join and get in on these good trainings, and we archive all trainings, and so you can see basically you'll be able to view the getting started videos, the essence of the individual strategies that's connected to the system. So this week on the S&P, last week we were talking about how the market had responded well to the Fed announcement. The Fed announcement for basically a very dovish Fed announcement that's basically the Fed said we will continue to be accommodative to the individual markets. This week we appear to have hit at least a temporary ceiling on all the indexes. At this point, since the market had gone up, the S&P had gone up about 13%. We can probably, right now, we have to treat what's going on as simply profit taking, or is it more? We'll just ask that question. Is it more? Could be, because ultimately we are still working, each one of the indexes is basically still working within that longer term downtrend that started at the end of 2015. NASDAQ profit taking, Russell profit taking. Notice on the Russell, one of the Fed presidents or vice presidents or whatever they are came out yesterday, Mike, and made the comment about, well, we just might, have to tighten again next month. And the Russell doesn't like that, does not like the concept of potential increasing interest rates, does it?
Well, yeah, nobody seems to like them in this market, and you know, it's only been about a little over a week, and the Fed comes out and says we're not raising rates, even though, you know, it's a couple months ago we said we would, and now, you know, just a week later, you've got a couple of the members of the Fed coming out and saying, well, we're going to raise rates, after a week ago saying we're not going to.
Yeah.
And you know. And the market will gyrate around what these people say, but as you put up in your slide here, I mean, what's really changed, and what's really changed since you know December, really, in the last 2 or 3 months.
And you know, one thing the markets don't like is basically either indecision or flip-flopping by somebody.
Well, uncertainty is another word for that. And traditionally, yeah, you know, markets have not responded well to uncertainty, which is why historically, statistically, election years, when there's a guarantee that there's going to be a new president because, you know, the previous president cannot do it any longer, the election years tend to be pretty rough on you know, equity markets because of the uncertainty about, you know, who the next one is going to be and what that's going to mean.
Yeah.
You know, just that general concept of uncertainty has usually weighed fairly heavily on equity markets. And maybe that's what we're seeing now, you know, the past 3 months or so.
Yeah, exactly. And, you know, and so that's where over this, you know, the economic news that's come out this past week, you know, bad news is being considered good news for the market. I was just, both of us were astounded that the terrorist attack in Brussels got such a small response from the markets. I mean, just a few years ago, anything like that would have, you know, really shaken the markets up. But, you know, what's that saying? I'm not sure right now. I've got to contemplate that over the weekend about what exactly that is. You know, what's that showing us, that, you know, where good news is bad news and that type of thing. Threatening of the Fed, and as I said here, what's really changed? The catalyst for the, you know, the rest of the little run that we've had over the last couple of, you know, last week and into this week has primarily been due to the dovish statements that the Fed made, and now all of a sudden that's off the table again. So it's kind of interesting. It is a time to be very light-footed. Yeah, Bruce says probably the 15th time we have a terrorist event, it becomes a new normal or a normal situation. But stocks above the 20-day moving average on the NYSE index, we're sitting about 79, right about 80 last week. It had dropped below the 80 level, and then this week, what we see was a continuation of that. We pushed up a little bit more into it and then fell off. We do not use this particular indicator as a sell signal to get out of things, but we just pay attention to it. And one of the things that, you know, Mike, that in looking at this particular chart that I find very interesting is that I can't get my daggum pencil to take it. There we go. Is that because it so dramatically fell from 80% of the stocks being above their 20-day moving average, all of a sudden we're down at the 50 range. It makes me, it tells me that of the vast majority of stocks that are in this index, that they had basically just barely made it above. Yeah, I did, Eric. Can you see I should looking at the percentage of stocks above their 20-day moving average?
Yeah, you know what? It's not showing on my screen either, Dennis.
Really? Well, that's not good. What are you guys looking at? What do you see?
We see your market update title slide.
Okay. You see that? Okay. Now do you see that?
I see no difference.
Okay. Not a problem. Hold on just a second, folks. We have the technology. Okay. What do you see now?
Same thing.
No kidding.
No change, at least on my screen.
You're not seeing the click-through of the screens?
No.
Huh. Okay. What is... Hold on a second. I may have... Oh, don't tell me you froze up. Yep. So hold on just a second. It appears as if GoToWebinar has frozen up.
That could be.
On my side. Okay, everybody just, hang tight, and I'm going to, I'm sorry to have to do this, but I'm going to have to reboot and then pop back right back on. Mike, I tell you what, I'm going to, no, wait a second, there we go. It just came back on. What do you see now?
Okay, now we're there. Now we see
Okay, very good. Yeah, just all of a sudden stopped. Must be a bandwidth issue. So I wouldn't think it was a bandwidth issue. We were there. We got to there. We got to here. This is basically last week's chart of the percentage of stocks above the 20-day. Then we bounced to here. And the comment that I was making was that a huge majority of the stocks, not over 90% of them got above their 20-day moving average. But with so many falling, all of a sudden we went, we lost 40% of the stocks on the index went below their 20, which was telling me that tells me is that the stocks really hadn't made a real strong move above their 20, the majority of stocks. And that's why when the market did start to sell off a little bit, we see a huge number, a significant number, 40% of them dropping back below their 20-day moving average. At this time, what we are looking for, of course, is I'm really excited because I think we're going to be having several resets on the early warning alerts this year. So we're looking for somewhere down here in this area down here to start resetting for a potential bounce. Again, I'm looking at the symmetry of the market that goes back to 2008 in the January, February, March, April, May timeframe, right before the market plunged, where the market got stuck in a little 12 to 14% channel and just ran sideways over those several months. That's the symmetry that I'm comparing to what's going on right now. Mike, you got any comments here on this one?
Well, what this is telling me, it's only been really, we just started having some selling yesterday.
Yes.
We had a little selling for a couple of days, some selling yesterday, some selling today. And even though, we got up to 90%
right
of stocks above the 20-day moving average, I mean, this has dropped off pretty rapidly. And it tells me that even though, price action might have gotten above the 20-day moving average, it didn't get that far above the 20-day moving average. Correct. For a lot of them, because it hasn't taken much in terms of the index levels coming down to really drive this, this indicator, significantly down.
Yeah, yeah, exactly. And so, I tell you what's going on here.
If you think about that too, the 20-day moving average acts as the middle of the channel with, things like Bollinger Bands and Keltner channels.
Right.
And in a downtrending market, it's certainly not at all unusual to get these little bounce back rallies back to the middle of the channel,
Yep.
which I think is probably, what we've seen here the past several weeks.
And so, yeah, without a doubt, that's, and I think the next chart, can you see the next chart? I just
Yes.
rolled, okay, I just rolled forward.
Oh, well, I don't think so.
I'm looking at the, yeah, gosh darn it. Come on.
Are you trying to go to the 200-day moving average?
Yeah, I am.
Month?
Yes,
yeah, no, it's not.
It's not syncing up. Not a problem. This is where you need multiple levels of technology helping you out. And if it's a issue with Comcast, we'll just flip over real quick here to I'll flip over real quick here to and see if a new connection will help us out. Or maybe just an, okay. Y'all can't see that I switched over screens, huh?
No, well, at least I can't.
Yeah, it sounds like it's still stuck. Okay. Hold on, I'm going to see if I can free up some bandwidth. I've got a lot of Okay. Folks, what is this? It is frozen up on me, which is not a good thing.
While you're fooling around with that,
go ahead. Please continue.
Yeah. Let me just make a little bit of a comment here. A large part, in fact, almost the only force that's been driving this rally since mid-February has been corporations buying back their own stock, and we've talked about that before.
Yeah.
I mean, over the last 7 or 8 weeks, on a net basis, institutions have been selling more than they've been buying. The retail individual investors like us have been selling more than they've been buying. And the only thing really driving things has been, the corporate buybacks. Well, since another earnings season is getting ready, and there you go, the slide just switched.
Okay.
All right, but to continue that thought, we're getting ready to enter another earnings season here. Next week, the beginning of April, and during the earnings season for a period of about 4 or 5 weeks, corporations are barred from buying their own stock.
That is correct.
And That's been the only thing driving this rally the past several weeks, and that's getting ready to go away, at least on a short-term basis.
Right.
For a few weeks. It's very possible that all hell is going to break loose, with the equity markets in general.
Yep. And and I've heard several commentators talk specifically about that. Some of the traders who are trading are basically saying, looking for the drops. I mean, they're literally, some of them are scalpers and day traders and all that kind of stuff. They're looking for those drops, though, when the blackout period goes into effect where a company can't buy back its own stock.
Right. And that's rapidly approaching.
So here's a percentage to talk about the 200-day moving average. Those of you who were on the session last night, which will be posted a little bit later today, there's a couple of things that kind of were of interest. As you see, the percentage of stocks above their 200-day moving average is only sitting at about 38%. Last week it was up at 43%. So that's not a huge drop, but it is one staying below this downtrending line, which tells us that it appears that the momentum is still to the downside. One of the other things that we're looking at is I replace the IWM with the SPY. And we highlighted this last night. Here we are in a couple of things. One, we got a big rounding top still going on. This is a monthly chart. And the S&P, the S&P is basically working within this triangle, asymmetric triangle, after rolling over. And it appears to be failing short of coming up and touching the top of the triangle. If that in fact does not get back all the way, that would be considered a bearish type indication, and we would anticipate either a little bounce here, and then but eventually a break of this lower trend line. So if that lower trend line breaks, then we're probably going to go back down and retest the lows that we had back about the 1800 level on the S&P. Mike, have you thought about this chart anymore since yesterday evening?
No.
Okay.
No, not since tonight.
Okay. But it's kind of interesting to notice that. And so, okay, it appears that we're functioning again. Real quick snapshot as of about 9 o'clock today. The S&P, the Dow is the only stock in positive territory. When I took the snapshot, the S&P has slipped back into negative territory. The NASDAQ has never gotten out of negative territory for the year, the NASDAQ Composite and the Russell. The Russell is getting close. As you can see, a slight drop from last week. And again, slight drop on all from the previous high from last year. All of those have dropped off a little bit. The Russell is moving back towards going into that and so yeah, cool. There is no index on Thinkorswim platform to be able to see these charts. You have to go here to barchart.com and look under. I can send you a link to that if you just send me an email. I'll be glad to. Where you can see these things. So let's take a look at the indexes. Mike, my charts are everything's switching over now.
Yeah, it seems. Yeah, you're fine.
Okay, I will highlight. Starting about early part of last week, I started talking about this ascending wedge formation, which is a bearish formation that typically always fail to the downside. We get a close below it yesterday, and then a pullback. We had also talked about the let me get that one. We'd also talked about how the move from last October into last November from here to here, lasted about 26 trading days. And we started highlighting is if this move here looks very symmetric to that move there. And sure enough, this move from the low on February 12th up to the high of Tuesday of this week lasted approximately 28 days, so a couple of days over. The size of the move was just a little bit over 13%. The size of the move here was 13%. And if we also take a look and say, okay, well, what is if there's also some symmetry in the pullback, I drew this line here along the same time frame. How many days did it take? It took 10 trading days, in other words, 2 weeks for price action on the S&P to work its way back down to this swing low, and then it rebounded. Same thing here. I've copied from this line here over to here, put it in place from yesterday's high, or 2 days ago high, Tuesday's high, to show approximately how much of a pullback that would be. And it just happens it works out where it's about a 38.2% retracement of this move from February 11th up to Tuesday of this week. And again, if we anticipate symmetry of move, we can anticipate this to kind of like start ticking down over the next 10 trading days, which would put us into around April 4th for it to be at this level here, because that way you would have both symmetry of of how much it fell, price action, but also symmetry of time. And for whatever reason, it tends to, on pullbacks and uptrends, that symmetry of time can also work out for you, and that's something to take in consideration when you're doing your analysis. And so as we take a look at this particular move down, how many days was that? 10 bars. So it's not uncommon for the S&P to work, when it does roll over and start to go into even a pullback, that 10 days number is something to keep in the back of your mind. If for whatever reason it breaks symmetry, let's say it pulls back for 5 days and all of a sudden just blast out with a real strong rebound, that would mean it was breaking symmetry and likely to mean we were going up to higher, perhaps even to retest these highs over here on the weekly chart from last year. At this point, we don't have that in place yet. Any comments on the S&P, Mike?
Only that mentioned about the blackout on the corporate buybacks,
yeah.
and how the corporate buybacks have been, the only real support for the market, for the past several weeks. And if that's going to have the effect that it could have, we certainly might be in for more than a retracement to the 38% level.
Yeah, exactly. And so, but that's something to keep in mind. And again, look what it did back in October. It fell down, dropped, bounced back up, couldn't make it back up to the highs, and then rolled over again. How far how many days did it take to go down here? 10 bars, 2 weeks. So interesting stuff. I always find it exceptionally fascinating when the market starts, it gets into one of those modes where it's just working in a symmetric method or way. And so that's what we're looking at on the S&P. Again, we eventually give it another couple of days or go to the intraday chart, and we can start drawing a trend line down here. And what's very also interesting for us engineers out there is this angle of ascent here is starting to look like it's going to equal the angle of descent here, which means it's falling at the same velocity with which it went up. NASDAQ. Okay. Now, Can everybody see the NASDAQ chart? Mike?
Yep.
Okay, cool.
Yeah, fine.
Okay, NASDAQ, what are some of the things? Daily chart, weekly chart. It had pushed just slightly above the 200-day moving average, puts in quasi bearish engulfing yesterday, and then drops below the 8-day moving average today. Now, if this is a pullback, we can actually go to this pullback here to kind of get an idea of, okay, this pulled back for 1, 2, 3, 4 days. And we can kind of measure that and measure the specific distance that it did pull back. Take this here, activate it, pull this up to the high, and that would put the NASDAQ basically right back into this support zone about 43.30. We're not there yet, but hopefully you'll be able to see, utilizing that symmetry idea where you can kind of start identifying where the potential levels of strong support, and that's also how we're utilizing the Fibonacci's. One of the things I really like on the NASDAQ weekly chart, Mike, is if we close right where we are right now, we will have a shooting star in place. This uptrend has not yet been broken, but we'll have a shooting star in place, which is a bearish reversal signal.
Yeah, and the week's over today,
and
right?
The week is over today.
Yeah, so the market's open for another couple hours. So it's unlikely that weekly candlestick is going to change much, in the next couple of hours. So I think we can count on it looking like that and on the weekly chart. Pretty much the way it looks right now.
Yeah, and taking a look at the momentum and all that type of thing, as I've mentioned before, is when we're in a downtrend, oftentimes momentum will go up to the zero line, test it, and then if the downtrend is going to remain in effect, it will roll back over and fall back down. So on a weekly chart, what we're seeing here is we have momentum to the downside. We have the true strength indicator looking like it's going to turn over. We have nothing really on the monthly chart yet. Of course, we're not at the end of the month. We've got one more week, but the monthly charts from an indicator standpoint, yeah, it looks like they're trying to turn, but is this just a little moment, TSI squeeze? That means we're going to fall further. And a second thing to kind of notice is on the monthly chart, we're right at the zero line. So it gives us some cross messages saying, well, maybe that means we're going to get into a bounce to move back up. And we'll see as we get closer to the end of the month if that, in fact, transpires. You got anything on the monthlies, Mike?
Only that, taking a very, bigger picture perspective on this. I mean, we've seen the markets, this market, the NASDAQ 100, to try to push back up to the 4,500 level.
Right.
Which isn't too far off, its all-time highs. I mean, it topped out in the 4,700 range.
Right.
And it's trying to approach that 45, 46, 4,700 number. Right. With real strong deterioration and divergences in the oscillators. And again, monthly charts take a long time to play out, but that particular dynamic probably doesn't bode well.
Yeah.
And I think we're also beginning to see the looks like your 8-period monthly, again, because of the long-term nature of the monthly charts, that 8 is probably going to cross down below the 20 sometime in the next couple of months.
Sorry about that. Continue talking. There we go.
Yeah, I mean the 8's beginning to turn down. The 20's flattening out, and it could take a couple months. But if the price action continues to deteriorate, we'll get an 820 cross to the downside.
Right.
And those usually tend to be pretty predictive on the monthly chart, both both to the upside and the downside.
Yeah.
I don't think we've had a downside cross here in how many years?
Quite a few. And one of the other things is here's kind of a hidden level of support on the NASDAQ, which is sitting at about the 43.57 level, which is the 8-period moving average on the NASDAQ. I want to run over here to the Russell really quick to give us another picture. Because as we can see here, the Russell has in fact already had that cross on a monthly chart. Look where price actions this, so far, just about this week, push almost up to the 1105 level, or almost the 1100 level, and then is in the process of reversing. Again, yes, we're oversold, but it can in fact go lower. As we see back when we got the big sell-off, the TSI actually dropped down here to the -50 level. Now the negative and the positive 50 on the TSI, regardless of time frame, is a very sensitive level where we need to be paying attention to it. On the daily and weekly chart, on the weekly chart on the Russell, we have almost a bearish engulfing, and it will remain a bearish engulfing unless we've finish back up here in the body of last week's candle. Right now we are not. We clearly have, like with the Russell as with the other indexes, at least a temporary ceiling in place. We can come back here and look look at the what's going on. We came up, we hit against just slightly above the 1100 level, and then we rolled over. Those who were watching the monthly charts would have seen that 8-period moving average there and said, okay, there is a natural area of resistance, a zone of resistance, where we can anticipate the Russell breaking down and rolling over. And so right now we've got it below the 8-day, below the 20-day, appears to be maybe finding some support here on the close to the 50-day moving average, and also a prior level of support about the 1063 level. If that is busted, then I will throw a fib on here really quick to give us an idea of where it might pull back to. Just do a fib from here. Up to here. And so basically the 23.6 retracement has held so far. If that in fact breaks, then we're probably going down here to the 38.2 to slightly, where it broke out above this swing high. And so there's a zone of support right there, and a zone of support at the 50, and also a zone of support between the 61.8 and the 1,000 point area of the Russell. So we want to be paying attention to those. Again, the Russell was most susceptible to selling off, and in fact it did. So anything else you got there, Mike?
Yeah, not really. I think we're pretty up to date on things. On the weekly chart here, the past 2 weeks, that left-right candlestick combination, kind of bearish.
Yep.
And again, I'll point out, it seems like hindsight now, but I know we were talking about it in real time in February. When things got down to around 950 or so on this chart,
right,
both on the daily and the weekly candle, and we had an awful lot of space between the 8-period moving averages on those charts,
right,
the price action, and we talked about how predictable it would be that we would get a bounce at least back to the 8 or maybe the 20, which is exactly what happened. Actually, it bounced further than that, and we even saw that on the monthly chart too. It's just something for people to keep their eyes peeled for. in the future.
Yeah.
When price action gets that far away from the moving averages, there is going to be a reversion to the mean. The moving average is acting as the mean in those situations, you know, in any time frame.
And so I've highlighted on here, as you saw, I did an extension off of this move from here to here to here, and it provided an extension. We had done the fib retracements from here to here, and as you saw, there was a couple of lines that really lined up right at this around 1040 level. That tells me that that level is, in fact, really strong support. And so we'll just watch it to see if, in fact, that level stall, you know, if this move down continues, and we'll see if it stops right there. And it's just kind of interesting, but there's a double level of support there. And so we'll be paying attention. I'll be paying attention to that. Another lesson, just real quick, as you can see here on this particular, I increased the width of my trend line there, but as you can see, it now goes from 1043 down to about 1041.8, maybe 1041, and so that's one of the not drawbacks. One of the things you need to watch when you do draw trend lines, depending on the thickness of them, it can cover several points on the individual index. And so if you're planning a trade around that level, there could be, you know, depending on what you're trading, there could be a large difference in some areas. This is 3 or 4 points, and that would be, you know, normal for something. Not what I'm trying to say. You could be covering up $3 to $5 worth of move with your trend line. So, okay. We shall return to that. So path of least resistance right now, we're treating the current move as a pullback, and so we'll be looking for levels of where it might pull back to, where some of the most likely, of course, is back to the 8-day move, not the 8-day, but back to that symmetry of move with the S&P approximately a 4 to 4.5% drop from the highs on Tuesday. Tentatively, I think we may have a little bit more downside and then a rebound, but ultimately we are still on almost all the indexes still in the process of working within a longer term downtrend, and so that will have some influence on top of the market, probably holding any advances off. Mike, what are you seeing?
Same thing.
Okay. Last Friday we had opened a position, sold some calls on the strategy 3 on the spiders. That one turned out exceptionally well. It was in the money, like $2.50, $3, but on Friday of last week it appeared as if that was going to be a top. It turned out to be a top, and so we were able to collect all that at and then more at the money or out of the money call worked out really well also. Here's where we're moving with the strategy 1. I'm anticipating the strategy 1 trades and strategy 2 trades. We'll start to see a tick up in those going forward into the end of March and into the months of April, May, June. I've been doing a lot of going to a couple of classes and also doing a lot of studying on some refinements, and so I'm looking forward to how those are implemented. This week's monthly BAM meeting, if you want a live presentation, Ashish Davi from the Sunnyvale IBD group is going to be making a presentation on when to close a trade. Very, very important. Did you know that majority of traders have no problem whatsoever getting into a trade, but they are challenged when it comes to, okay, well, where do I get out of a trade? And oftentimes we tend to dilly-dally because our plan doesn't really focus on getting out of the trade. And so Ashish is going to be talking about that. We have been working and continue to work on refinements of timing for all strategies, including second chance entries on EWA. And if you have a group, I would love to chat with your group. I can come in via webinar. And as most of you know, that the motto of the active trend trading is basically to clarify, simplify, and multiply. I am constantly working on that. Mike and I, basically chat about how to keep it simple and what can we do to make it more clear continuously. But we base I base the system off of 5 pillars of active trend trading: what to trade, top quality IBD stocks and index ETFs, when to enter, when to exit, what strategy to use, and what to expect. So one of the things I always believe in is that the system must drive the individual strategies. Because that way it keeps it simple, in that the same triggers that get you in with the system work for the income. This is strategy 3, strategy 2, and strategy 1. So if you're joining us or watching a recording of this, welcome. I invite you to join with us and become a member of the Active Trend Traders, or the Early Warning Alert service, and you can get a significant discount off either the monthly amount or the yearly amount by going to this website down here. So with that, I think that's it. Anyway, I want to say see you guys next week. We'll be back to a regular schedule next week, and have a absolutely great and wonderful Easter. I know we're going to be celebrating with our family up in Novato, California. So Mike, Mike has dropped out. So so with that, that concludes the main presentation, and now I've got time to take a look at some stocks if you guys are up for taking. And I also thank you guys for being flexible, being able to join us on a Thursday rather than a Friday. So Eric is right. Eric, you are always right there, ready to put out a ticker. Nike. I like Nike. It had a little bit of disappointing earnings, and it, as we can say, it dropped down. Nike made an excellent pre-earnings trade if we would have been patient to pick it up down here at the 58 to 59 level. Made a nice run. Now it has pulled back. And again, here, Eric, we look at, we can look at a couple of things. One is the symmetry of trade. So from this high to this low, and we can just move that, activate, and move it over to this high. If it does the same type of pullback, it's probably going to put itself down here in the around $60, and so we're not, and it would look like that the true strength indicator and the momentum will be favoring that kind of pullback. And so I would be looking for it to become interesting down here and at, bouncing back off the 200-day moving average. And if it reverses earlier than that, then we'll be keeping our eye on that, because there is a level of support that is right in there that we need to be keeping our eye on. So are you in the trade right now? And so I just sent out for those who are trading options with us, I just sent out an alert, email alert on PayPal. What am I looking for with PayPal? As we can see, we have this was pretty significant fall on PayPal, but PayPal, I think, I still like PayPal to the upside, and so I'm doing basically a option trade that is based on earnings being on and I think this is the, when is it? February 27th after the market. And what I'm trying to buy is I'm trying to buy some of the the week of April 5th, which is the week after the normal monthly expirations, some of the $42 calls, but I only want to buy them if I get back here and retest the 38 level. I should be able to pick up them for about somewhere between 65 and 75 cents a contract, or so it'd be $75 a contract, and then basically just hang on and see what happens, because I know a couple of things that will be going on in between now and then. Is one, as we get closer to the March time frame, the implied volatility will go up. The volatility will go up, and regardless if the stock goes anywhere or not. But we also may get that pre-earning run into the end of or into earnings, which could very well break us out of this, above the 42 level. And so that's that's one of the trades that I will basically kind of fire and forget and just let it on, because we have a very small amount invested in it. Tracy asks questions, options different for each trading house. Schwab doesn't list an April 5 call at 42. Tracy, you're going to have to, if you're trading with Schwab, you're going to have to, call and talk specifically to them. They may hide some of those option chains. But yeah, with the Thinkorswim, it's a weekly option. And so I don't know if Schwab does weekly options or not. Does anybody know? But anyway, that's the idea behind that one. Let's see, MBLY. Mobley. Come on. Okay, Mobley looks kind of interesting. It came off this low here. Earnings were pretty good. Appears like it's trying to reverse its downtrend. It may or may not be there yet. Let's see, who put this one in. Okay, Kuwinder. I hope I pronounced that properly, but it's getting close. It came right up, and we now have this downtrend. It broke out of the downtrend that was from here. I can connect these highs across there. So we have a breakout of this downtrend, but we had a retest back against the 8-week moving average. Same thing going on here. What you want to be waiting for, of course, is for a reversal candle. It may find support here at the 33.52 level, and we would like to see our momentum indicators start to reverse and turn back up. Right now, they're in a downward trending motion. And it may just go sideways here, or maybe even drop down here to the 32.50 level. And then just watch and see what's happening with the indicators on a weekly basis. Yeah, this is a bearish engulfing, and it appears like the momentum oscillators are turning over a little bit. So look for a potential retest, and as I said, it could retest all the way down to 32.50. So I don't know if you're in the trade or not, but so Judy, we killed your PayPal. Annette. Now, Okay, there's a couple of things on the daily chart here that I like about ANET, and I want to be watching it. One, not really a positive divergence between here and here, because this was not an equivalent low, but the momentum definitely started to reverse once we did hit this low, which was at the beginning of a support zone, and it was also outside the moving average envelope, And so we got a really nice reversal and then a move exactly. And this is one of those mean reversion trades. Where does it go? Almost, exactly to the 20. And so that was about an 8 to 9% gain, 8.4. And now it's pulling back from there. That works as resistance, pulling back from there. And we're waiting to see what the next move is going to be. Is it going to retest back down in this area? If it does, look for a positive divergence, Judy. And no, who put that one in? That was Cool Winder. Okay, look for positive divergence because we may go up from there. Good size, higher low. So that's one of the first ingredients that needs to be in place for a new uptrend to start. And then you can just basically draw your trend line across here and expect if it does break out and get back up into that area, that's where you'd start running into potential resistance, which is about the 65 level. Yeah, I've been watching this, but haven't been really finding a really good place to get into it here lately. FCX, and FCX is Freeport-McMoRan, okay. Again, I would, and this is one of the mining stocks, and are they gold mining stock? I think they are, but anyway, they're a big mover. It has basically been on it. Well, it's run a lot from down here up to up here, and that's a 214% gain in a very short period of time. It appears as if it is trying to reverse its downtrend that had been on for quite a long time, and we've finally broken up above this support, this resistance line, trend line, and now I would be waiting for it to do a pullback. How far is it going to pull back? It could have symmetry with these past pullbacks, so it may have reached that level. Or it may bounce off of the, here's another support line about 8.5, and that's right, okay, oil, thank you. I would be looking at it in that area to move higher. As you can see, the momentum has kind of fallen out. The True Strength indicator is also falling out. Weekly wise, it looks like it wants to turn over here on the weekly chart, so it's definitely not time to get long on this right now. MTSI. Okay, MACOM. Okay, MACOM just broke out to a new high. It's in an uptrend. Judy, as you can see right there, looking for a potential pullback. Again, a pullback into, about this same amount would put it right back to the trend line, and that's what we would potentially be waiting for. It looks like it has found support at 41. However, our indicators, our momentum indicators, have not started to turn around yet. So, okay. Folks, if there's no other stocks, I'm going to call it a day. Again, I want to thank everybody for joining us today. I hope that basically seeing how we analyze, how Mike and I take a look at where things could potentially go, is giving you some great ideas about how to do your analysis over the weekend, cut it down to just a few stocks, and then work for there. Okay, thanks, Eric. Yeah, it always frustrates me when we have technical difficulties, and so I'm thankful it cleared up. So, hey, have a great weekend again. Have a wonderful Easter. God bless everybody. Good day.